Hello guys, and welcome to the first backtesting session with Marco's trading journey. So this is the first on the channel. I have got many requests to do it. Finally doing it. It will be very interesting. So this is TradingView, of course. I'm using the replay function. Right here you can see these buttons. So we are going to be doing the month of April of 2022. We have the forward button, so that is the one we need. This is the 1 hour chart. I'm trading only the 1 hour chart. For the strategy, of course, I'm not moving to the lower or the higher time frame. 1 hour is all I need. I'm using only one indicator, which is the weekend Saturday Sunday indicator. What it does basically, it just highlights when the weekend is approaching. Why is that important? Well, for me it's really important because usually on a Sunday evening I'm not trading. I'm only starting to trade on a Monday London Open, so Monday 8 AM London time, that is when I start taking trades. Anything before that is kind of not high probability. The trades usually fail. Also, I need to see when is a Monday, when is a Tuesday. Of course, here on TradingView you can see right here it says that this is Thursday, for example, this is Wednesday. Mondays and Tuesdays are predominantly range-bound days. They're not that good to trade. So what I'm waiting for is I'm waiting for a Wednesday, a Thursday, or a Friday. Usually Monday and Tuesday I'm being more patient. I'm looking only for the cream of the crop, no-brainer, high probability trades. And then on a Wednesday, Thursday, Friday, I can be a bit more lenient with the setups and I can be a bit more tolerant. So then I'm trading until Friday 5 PM London time. That's my cutoff time, and that's when I stop taking any trades. That is why I need the weekend indicator to know when to stop taking trades in my backtesting, of course. So that's the only indicator I use. I just trade pure price action, no real indicators, and just sticking to the 1 hour chart. So I have here the most recent low line and the most recent high. I have stopped using them for my backtesting. I usually do it with a clean chart, but for you to follow more easily, I'm leaving these two lines on just so you can know where the most recent low and the most recent high is. I will be moving them when a relevant move happens, so I will not be moving them each time, but I'm keeping them on for you to get a better grasp and to have an easier time following. So let's get started. This is Friday, the 1st of April. Let's see what setups will form. We broke the low. Overall price action is looking range bound. So I'm trading the Gorilla trading strategy, which is a trend trading strategy. And I'm waiting for a nice trend. I'm waiting for some nice impulses. Let's see what will happen. Broke the low, retraced here. Now we broke the high. This would be the most recent high. We broke it, left a wick, left a huge wick. So usually when we see a huge wick, it's either a reversal or a range. It's a signal of a reversal or of a range. And as a trend trader, this is a warning sign to us. So let's see what will happen after this candle. We actually continued up, so that's good. That means we can start looking for a trade. We have continued up once again. Now it's a free candle push. Nice momentum, clean candles, so I do like this price action. The two continuation patterns that I'm trading, so the only two are the flag, which is basically the first high, first low, second high, second low, and then we enter. Or I'm trading the break and retest. So that is the second continuation pattern that I trade. Very simple stuff. Let's take a look what will happen. So now we broke the high, but not by enough. Broke the high again, left a huge wick, so I'm expecting a range. Now we have broke the low. So let's see what will happen now. And what's the time? Well, it's already 3 PM on a Friday. Now we got a V reversal actually. As you can see, a V, and I'm expecting a larger range usually. When we get the V reversal, that's a common pattern in the Forex market. So still stuck between the low and the high, broke the low, left a wick, and now it is the end of Friday, so this is the period I'm not trading. Let's wait for the London Open on a Monday. Let's see what the time is. So a bit more, 7, 8. Okay, so let's move our lines. Let's see. This is the most recent high. This is the most recent low. Overall price still kind of stuck in a range. So that is a warning sign. That is what I have in the back of my head, that the overall price is kind of stuck in a range, which makes every trade a bit less high probability. So I need to see a bit more cleaner price action. That doesn't mean I won't be taking a trade, but it just means to be a bit more patient. Now we're continuing up. So currently I'm not looking for any trade. As I said, Mondays and Tuesdays, I'm looking for really high probability, large momentum. This momentum right here, not enough for a Monday morning. As you can see, we retraced, stuck now between the high and the low. And now we actually broke the high and we got some nice momentum. So at this point we have moved away from this range, and I am starting to see nice momentum, and I am seeing how the next candle will form. We got a huge wick. Unfortunately, that signals to us that we either want to see a range or we will get a reversal. So the only way I will be taking a trade is if I see a nice wide range. Let's see what will happen. So looks like we have started to range, and now I am looking for a flag entry. So I am looking for a flag because we have started to range. We have got 1, 2, 3, 4, 5, 6, 7, 8. 8 candles of a range, 9 range candles, 10 range candles. So that's definitely enough for me to negate this wick. Usually anything above an 8 candle range fits my plan. Depends on the pair, of course, but for the Aussie and the US dollar, which this is the Aussie US dollar, as you can see here, this is definitely enough of a range after this huge wick. So let's look at for an entry candle. Let's look a bit more. This would be the entry candle. So the flag just formed. We have first high, first low, second high, second low. And the entry candle is the first bullish candle after the flag forms. So this is actually the first bullish candle. It is blue. I like the prior momentum. I like the prior push. It has sort of started to move away from this range, so I will be taking this trade. Risk to reward tool. For this pair, I'm using a 12 pip stop on every trade. So a 12 pip stop is like the default stop loss size for the Aussie and the US dollar for me personally. Now let's just wait for the trade to... Okay, so we have got a push up. Looks like this is a news candle. Usually news candles look like this. Huge candle with a wick on the top and a wick on the bottom. And currently I do have full risk on the table. I still haven't reduced my risk because we haven't gotten a counter trend move, but this is moving up, which is a really, really good sign. So moving up, still haven't reduced my risk, still haven't gotten a counter trend candle. And we just broke the high here. So what we can do, we can place the stop loss underneath the most recent low because we have just created a counter trend move right here. This would be the most recent low, so the stop loss has just been moved underneath that. Currently how this is looking, it's looking very good for a scale-in. So I am in a trade right here and I am looking to buy more. So let's see if this maybe retraces back. So this is the second type of entry, which is a break and retest. We have a nice push up, we have a pullback, we continued up with a clean close, so no wick on the top, which is a really good sign. And now we're waiting to see if it retests the upper level. Now I'm taking trades from the inside bar. The inside bar is a bar that is engulfed with the prior candle, so it is inside of the prior candle, but that's kind of very technical. And you can also take it from the most recent high right here. I just have this one refinement because it kind of creates a better setup. So I do now have a pending long order at this inside bar level with a 12 pip stop, of course, always using a 12 pip stop. And so I have gotten taken out for a 1% loss. If you don't know, I'm risking 1% on each trade, so 1% of my account, or for FTMO, I'm risking 0.5%. But let's say I'm trading this on my personal with a 1% risk. So I have just got taken out for a 1% loss on this trade and a 7.1% win on this trade right here. So net, this is 6.1% currently. So now we can move on. Let's move the lines. Let's see how the price develops. Price is pushing down. Of course, we can move this a bit to the left. So what is happening now? Well, the price is trending to a downside from this small ascending at the top. The logic behind an ascending or a descending structure is, well, when the price is ascending, let's say, people keep their stops on the top of these candles. So they're going short and they're getting taken out right here and right here. Actually, not right here because we haven't had a move up, but right here people keep their stops. Maybe they're going short. Let's say they go short here. Well, they just got taken out by the market makers, and then the market makers reverse the price to the downside. That's again very technical, but that's the logic behind trading the gorilla strategy. You're seeing where the liquidity has been taken out and where the market makers have basically screwed the retail traders, taken out their stops, and are ready to push the price in a certain direction. So you're looking for liquidity grabs. Right here, this is a liquidity grab. And now the market makers have reversed the price, so I'm looking for a short. Another candle continues, which is a good sign, definitely. So definitely a good sign that we will see some sort of a nice downtrend. Currently waiting for a flag to form. No flag formed, so there was no two lows and two highs. We instead broke the low and created a wick. So right here at this point, I can set my order, but I'm kind of scared for it to just retrace straight away, because when the price retraces straight away with a, let's say, blue candle, it usually gives a larger range. So what I want to see maybe this, I want to see maybe a one candle continue, or I want to see maybe a nice small candle pause right here like this. So let's see what will happen. Next candle pauses. So we haven't gotten a break and a straight retrace. And now I am setting my order short for a break and retest trade. There is no inside bar here, so I'm setting it at the most recent low. I'm using a 12 pip stop as always. And I'm seeing if I maybe get tagged in. Another candle forms. This makes the trade even more high probability, because now it's sort of a combination between a flag and a break and retest trade, because we have got the first low, the first high, second low, and then this would be the second high. So this is now even more high probability, since it is a hybrid between the two entries. It's a hybrid between a flag and the break and retest, which is called a combo, if some of you are asking. And looks like this has just tapped me in, or this candle has just tapped me in. And now I'm seeing how the price action will develop. Let's move the lines. Most recent low here, high here. Let's see. So it will continue to the downside. Looks like it's still having full risk on the table, because we have not formed a counter trend move yet. So still waiting. And just one more thing, when I'm in a trade, I'm not looking to scale in unless I have removed the full risk. So the reason I scaled in here, because I had no risk on the prior trade. The prior trade was already in some profit. So my risk is always a maximum of 1% on one pair. So right here, I'm not looking for a scale-in or anything unless I have the full risk removed. So we have again broke the low here. This, I believe, let's see the high of this candle, 931. 931, so this was not a counter trend move on the top. But we have now broken the low, so I can move my stops to the most recent. Let's move the lines also. This is the most recent low, most recent high. I have now moved my stops in some profit to the most recent high. And now seeing how the price will develop. Looks like it's starting to crash to a downside, a very good sign. And I can now look for a scale-in since we are in a profit on this trade. So let's see. So right here, we're just waiting to see a counter trend move because my entries require a pullback. So I never get in on like an impulse candle. I always get in when it pulls back, either on a flag or a break and retest. Right here, we have another impulse form. We have a huge wick. After this, I'm expecting a range. To be honest, when I see a wick that is big as this one is, I'm not taking any trades. I'm just expecting a larger range. So a flag now did form. We are still having our stops right here since there is no counter trend move right here. There's no opportunity to move the stops. A flag did form. Maybe some people would look to scale in on a short here because we have the first low, first high, second low, second high. For me, after seeing this huge wick, I'm not taking any sort of a trade. Usually after this huge wick, we get just a large range like this. And if you're a trend trader, you need to ask yourself, do you want to be in a huge range? I don't think you do. So you just stay out. This one looks like it did work out. So again, if some people decided to be in this trade, they would be in some profit. But what we can do, because we broke the low now, we can move the stops. We can move the stops above the most recent high, which would be right here. This is the most recent high right here. And we have now moved the stops. We are now in some really nice profit. So very good. Let's see how the price develops. Right here, I'm not looking for any sort of an entry. This was the most recent low. We have just broken it and not by enough. So this is not enough of a break. We're just kind of leaving weakness, leaving wicks, and it is displaying weakness. So we are leaving wicks which are displaying weakness to the downside. So I'm being more patient. Let's see what will happen. And we have broken the low again. So that means we can move our stops even more. Right here above this candle right here. So let me move the line so you can see this is the most recent low. This is the most recent high. We're now in some really nice profit. Looking to scale in, but again, I don't see any strength to the downside here. I don't see a nice clean push with a nice clean close. All I'm seeing is a lot of wicks and a lot of indecisiveness. Still waiting. Now we're ranging between the low and the high. Let's see what will happen. And I believe we have just got taken out. Let's see. We take the measure tool. Here to here, 1.2 pips. Most probably I would have been taken out, so I usually keep my stops 2 pips above or below a candle, but with the spreads I believe I would have been taken out right here. So this was a 7.72% of a trade if you're risking 1%. Very nice trade. Again, price is still displaying weakness. We have got a clear flat range here, a push down, but it ended with a wick. Not really good of a push. I'm not seeing consecutive candles or some large momentum. Let's see what will happen. And yeah, still kind of ranging around. So according to my backtesting, I'm still not seeing a nice clear impulse. I'm just seeing these stacked candles indecisiveness. Now we are starting to get some nice momentum. So let's see if we can get an entry here. What is also good about this candle is there is almost no wick on it, which is a really good sign. Let's see what will happen. Oh, aggressive retrace. A big warning sign when you see a candle that is kind of the same size or bigger than the candles in the impulse. As you can see, it is almost the same size as this candle. That is what we call a momentum shift. When we see a momentum shift in the markets, when we see a momentum shift after a nice impulse, that is a no trade for us. That is a big warning sign. It's like a wick. Usually price ranges or reverses. Most of the time it actually reverses in the opposite direction. So there are two major warning signs when trading with this strategy. That is a huge candle and an aggressive retrace. So this huge candle or this aggressive retrace. So now I'm just waiting for the break of the low or the high. I'm not looking for any sort of a trade. And we have also gotten into the weekend period. Let's now wait for the London Open, of course. Let's see. And London has just opened. We can now start looking for setups again. Let's see what will happen. We are currently not really moving anywhere. We are kind of moving correctively to a downside. I'm not seeing any clear momentum up or clear momentum down. We have broken the high, retraced, left the wick. So I will not be moving the lines unless I see a nice established trend. Now we have broken this most recent low, retraced. I can now move the lines, but if you just look at the price action, is it moving up? Is it moving down? I don't think so. It's not moving anywhere. It's just stuck in a flat range. So that makes us be more patient. Broken the low, retraced, haven't gotten any follow through. Broken the low, not enough of a push. Broken the low again. Left a huge wick, retraced up. Big warning sign. And now still we are not getting some large momentum. So what I'm looking for a momentum shift. I'm looking for like a large candle. Currently, we're just getting small candles. I'm looking for a candle that is bigger than most of these candles. So I'm looking for a big candle to show me momentum. Still small candles, and now we have gotten what we were waiting for. We have gotten a large candle. Again, maybe right here some people were looking for a trade. Let me actually take it back. I kind of rushed this. That is a big problem in backtesting. A big problem that I experience is rushing and clicking too fast, and then you miss some trades. Again, I wouldn't take this trade, but maybe some people would consider it. It would be right here. Would be your entry because this is the most recent high. You can also take it from the most recent high here, but this is the kind of the lower most recent high. Now I'm getting into technicals, so don't really mind what I'm saying now, but this is just a break and retest trade. We are retesting this upper level. So let's see what happened prior. A nice descending structure. We have that. After descending, we usually reverse up. We're starting to reverse. We have gotten a clean close on this candle right here and a nice push. Let's see how many pips from this high. About 5 pips. That's okay. That's nothing to write home about, but it's okay. One warning sign, it's Tuesday right here. You can see it is Tuesday. And on a Tuesday, I want to see a bit more momentum. This prior impulse right here is kind of leaving wicks all over the place. Price action is not that clean. I need to see a bit more momentum. That is why I would not have an order on at this point. But As we can see, the trade would work out nicely. So if anyone did have an order on right here, they would now be in some nice profit. They would be able to reduce their risk, to actually put their stop loss in profit, because we had a counter trend move here and we broke the high. Again, doesn't really fit my plan on a Tuesday. What we're seeing now, we are seeing that we broke the high, left two huge wicks. What did we say about wicks? A big warning sign. So now we have just reversed to the downside. Had to check the charts because it was the top of the hour. Every hour I'm checking the charts because I'm trading only the 1 hour chart. So had to check what was going on in the markets. No entries currently. So let's now continue with the backtesting session. What happened now is that we broke the high, left two huge wicks, retraced. Then we broke this most recent low, left a wick, and let's see if we will retrace. We actually continued down. Let's see. This is not really showing me some strength, but we are getting, we're getting nothing, to be honest. I'm expecting a range because we broke the low. Broke the high with these two huge wicks. Usually they signal a larger range. This momentum down is not really something that is showing me much momentum. Again, we broke the low. This was a counter trend move. We broke the low, left a large wick and retraced. Let's just see how the price develops now. Again, just kind of ranging around. This showed me nothing, to be honest. Then we now got sort of a V reversal, which usually signals to us a larger range. Let's see if now the candle retraces or if we actually continue with some momentum down. And we have retraced. Now I'm expecting a larger range. And we are actually continuing to the downside. So this impulse right here, maybe some people are looking, this is a counter trend candle since the low is higher than this one. Maybe some people are seeing this as a downtrend, looking to enter on a short. For me personally, this doesn't look that good. This push down has sort of counter trend blue candles in it. This push down has a lot of wicks to the downside. I'm not really seeing what I want to see. Now with this candle continuing, I can start to look for some entries, but again we got a wick on the bottom, so we need to see a range before we look for any entries. And we got now a huge wick. What did we say about huge wicks like these? No trade for me. I'm not looking for anything currently, that's just too big of a wick. And the par price action is pretty crappy. Now an aggressive retrace, so we are now starting to get momentum to the upside. Let's move our lines. So we have now broken the high, but how did we break it? If you analyze these few candles, you can see leaving wicks each time. Does this show momentum? No, it doesn't. Just look at the size of the wicks or of the impulse candles, like they're so small compared to, let's say, this impulse down. They're so freaking small. So that is not showing you momentum to the upside, that's just showing you some quiet price action. Then we broke the high, retraced, left a huge wick to the upside, expecting a range. More wicks, more ranging price action, broke the low, retraced, broke the low, retraced again. Starting to continue, but not with a lot of momentum. Again, what you're looking for a momentum shift. You're looking for, let's say, a candle like this, like this, like this. And we're just not getting those big candles. We're just getting smaller candles with lots of wicks. Wicky price action is bad price action. Wicky price action is range bound price action, and we're looking for clean impulses with clean closes, exactly like this one. That's what we're looking for. So let's see if we will get an entry now. Continuing down, good sign. It ended with a large wick, so we need to see a range before we look for any sort of entries. Got an aggressive retrace. Again, why is this an aggressive retrace? Well, if you compare these two candles with the size of these candles, you can see they're kind of similar. Only this one is bigger. So for me, I count that as a momentum shift, especially when there are two in a row. At this point, aggressive retrace. I'm waiting for the break of the low or the high. I'm not looking for any trades. Let's see how the price develops. We broke the low. Did we get some momentum? Did we get a nice push? You tell me. Compare this candle to this prior push. Does this show momentum? No, it doesn't. And when you see a range here, let me teach you another lesson. When you see a range here, like this, a wide range, usually there is a liquidity area below and above that range. Why? Well, because the traders on the lower time frames, they are trading the range, they are buying the bottom, they are selling the top. Guess where they keep their stops? They keep their stops below or above the big swing lows or swing highs. This would be a big swing low on the 1 hour chart. So if you're trading on the 5 minute, you're most probably keeping your stops below this low. That is why this is a juicy area for the market makers to tap into, grab the liquidity, take out the stops, and then reverse the price in the opposite direction. That is exactly the methodology behind this strategy. You're trying to see where the market makers will take out liquidity and then reverse the price or create a trend up, a trend down. But we want to see where they have taken out that liquidity. And we don't want to be the traders that they're taking out liquidity from. So we don't want to be the retail traders who have their stops here and that have just now been taken out. And then the weekend comes. So now we are waiting for the London Open again. Let's wait. 8 a.m. Looks like a trend is starting, but again, I'm not taking any trades. London Open. And London has just opened. We can now move the, let's see, the low. This is the lowest low. This is our most recent high, since it is the first, it is a counter trend move. Again, getting into technicals. If you want to learn about that, definitely do a one-on-one coaching call or check out Guerrilla Trading. That is where you will learn all of the little technical stuff. There is a lot, but once you get into it, it will be easy to learn. Link is in the description. Definitely check it out. Now we can start to look for trades. What do I see right off the bat? I see double wicks on the bottom of this nice impulse. I'm not gonna lie, impulse is really nice. I see some large momentum. Look at those moves. They're big. They're definitely showing me a momentum shift. Compare them to these ones. So everything is textbook about this except the double wicks on the bottom. Double wicks are a big warning sign, as are all wicks. I'm expecting a larger range. If I see a wide range play out, I will be looking for a trade. So let's see what happens. Unfortunately, we get an aggressive retrace. So double wicks plus an aggressive retrace, that is a big warning sign, and it's also a Monday. I'm just not looking for any sort of a trade right now. Why is it an aggressive retrace? Well, the candles they're not bigger than the impulse candles, but they are kind of similar. So, and what is also bad about it is that they are two in a row. Usually when we get two in a row, that's a clear example of an aggressive retrace. Now I'm not looking for any sort of a trade. I'm just seeing how the price will develop. And well, looks like a flag did form here. So let's take it back. if some of you guys would like to take this flag. It did work out this time. As I said, for me personally, large double wicks, aggressive retrace. This would be the flag, first low, first high, second low, second high. Bearish candle after the flag forms is our entry candle. For me, I was not looking for any sort of trade, but it would have been a good trade. You would have banked some percentage. For me, it just did not fit my plan. Especially since it was Monday. On a Monday, I'm being a lot more patient. I have taken many valid trades, many losses on a Monday and a Tuesday. So I have kind of started to avoid those days. Except if we get like a cream of the crop, no-brainer trade. So what is happening now? Well, we have just broken this most recent high. And I'm seeing if this will continue up. And it just retraces. So a big warning sign, we have just retraced. Let me just check if you maybe had like an order here. Would you have been taken out? You probably would. So let's just ignore that trade. Didn't fit my plan anyway. That would be a reversal. I think we will see a reversal maybe later, so we will go over it. So if you're wondering, I'm taking either a reversal from an ascending or descending, or I'm taking a continuation trade. So those are two types of setups: reversals and continuations. A reversal is when we get like let me just draw it somewhere. So reversals are when we get like a descending and then this first reversal. A continuation would be when we start a trend and then we get in somewhere in these break and retest continuations. It's basically a continuation of a trend. Okay, so now we got this impulse up, but it ended with a huge wick and an aggressive retrace. This is just a classic aggressive retrace. Look at this candle, it's really big. For me, this is no trade. I'm not looking for any sort of a trade here. I'm waiting for the break of the low or a break of the high. And so we have continued up. We have broken the high. We got some momentum, but I'm seeing also some weakness at the same time. Why is there weakness? Well, because we left a wick, a large wick on the top. Let's see how the next candle looks like. It's actually continuing up. It's actually giving us a clean close. This is a really nice sign. Usually when we get a clean close and we get momentum like this, the price continues up, the price starts to trend up, or actually continues with the trend. Okay, we have now gotten also a setup. Let's analyze this setup. What's good about it? Well, it's good. First, it's a Wednesday. On a Wednesday, setups work out. Second good thing is a nice push up and a continuation. But there are some warning signs. So the first one would be this larger retrace. So if you compare the size of this retrace, it's kind of large. It's kind of bigger than the impulse candles. That's a warning sign. Also, this prior impulse ended with a large wick. We're expecting a range. And the biggest warning sign of all is that this break is just not big enough for this sort of a setup. It's not even a 2 pip break. So I'm looking at it from the close. Definitely not enough to take a trade. So this candle actually continues, but still doesn't fit my plan. This break is just not convincing. It's not that impulsive. It is a 4.5 pip break now, but still not convincing me. We are leaving these small wicks to the upside, and a kind of a warning sign that, as I said prior, this wick and this sort of big retrace, usually these setups you can backtest it. These setups don't work out. What you're looking for is you're looking for like a small pullback here with no momentum shift, and then you're looking for it to continue. So overall, by looking at all of the the good signs and the warning signs. For me, the warning signs are too big. They outweigh the good signs. I'm not taking a trade here. If you would like to take a trade here, then you would put it on the most recent high. You're waiting for the retest of that level. Another wick forms, sorry, another candle forms, leaves us a large wick. Doesn't fit my plan. I need to see a range now. And there was no range. We just got an aggressive retrace. And we have now continued to the upside. So we have now continued to the upside after this aggressive retrace. Again, this is trending up. Right here, it is trending up. But the pullbacks are getting deeper. Do notice it. Look at this pullback. Look at this one, it's even deeper. What does that mean? Price is slowing down to the upside. Momentum is losing steam. The pullbacks are getting deeper. The sellers are starting to win. This is a nice push. This would be the break of the high. It is a nice push. It is a nice close. There is only a small wick, but it is starting to lose momentum. So I'm not waiting for any sort of a trade here. I'm waiting for the break of the low or break of the high. Let's see what happens. As you can see, momentum to the upside has been lost. Can you see it? We have gotten another deeper pullback. So the pullbacks are getting deeper and deeper each time. Deeper, even deeper. So let's see what happens now. We have broken the high, retraced. We are now stuck in a flat range. I'm waiting for a push up or a push down. Push down. We continue. So let's see what happens now. This is starting to form a nice impulse. Let's see if we get an entry pattern. Another candle continues. This is looking really good. I'm seeing some nice large momentum. I'm seeing a large push. Look at these candles, compare them to the prior price action. Look at the size. They're bigger than almost every candle right here. That is showing us a momentum shift. That is showing us that the market makers want to go down. Because who controls the market? The market makers. Do you think the retail traders have any impact? They don't. They're kind of what they make 2 or maybe 5% of the whole market. The people that move the market are the market makers. When you see a big move, that is the market makers either buying or selling. So you have to remember, retail traders are not moving the markets. Market makers are moving the markets, and where they want the market to go, that is the direction that the market will go in the end. That's why it is important to see the liquidity grabs and see where the retail traders have been tricked. Okay, impulse has ended. We have gotten double wicks. At this point, I want to see a wider range right here to take a trade. After double wicks, I want to see that wider range with no momentum shift. Please remember, no aggressive retrace, because that signals a reversal or a range. So the only setup I will take is something like this, like we did prior. So you can skip you can play the video back. The flag that we took, that had a really nice range. And we have then broken the low. So this is really interesting. Let's of course move the lines. And this looks really good. What's good about this? Let's go over the good signs. First good sign, it's Friday. On Friday, trades usually work out. And if you want a little tip, usually on a Friday there is a sell-off. Usually we get a nice push down on a Friday afternoon. Usually price starts dropping. You can backtest it. I have really noticed it. Every Friday or almost every Friday, the market makers decide to just sell off the pairs. So there is a move down. First good sign is Friday. Second good sign, the price is going down. The Friday sell-off, remember that. Third good sign, nice push down. A really clean impulse. Fourth good sign, ascending on the top. price was clearly losing steam to the upside. So the sellers were clearly starting to accumulate positions and they were clearly winning. The buyers were starting to struggle. The pullbacks were getting deeper. The fifth or the sixth, whatever good sign it is, now we have gotten a nice continuation down with a clean close, so almost no wick on the bottom. Let's see the break. How big is the break? It's around 4.7 pips. It's not that much, but it is good when you combine all of the good signs. What are the warning signs? Well, the warning signs are these double wicks. So we are expecting a range. But to be honest, with all of the good signs that I just said, the 5 or 6 of them, we can ignore these double wicks. They are just going to be ignored because it is worth taking the risk right here. There's just too many good signs. This is a textbook trade. And I'm just going to be placing an order on the inside bar with a 12 pip stop. Right here is my entry, the inside bar. You can also do it from the most recent low. I just use this as a refinement. Again, that is some technical stuff. We get tagged in, price drops. So that is what happens when you get a textbook setup. That is what happens when you get all of the warning signs, all of the good signs combined. The price just tags you in by a few pips and then drops. So let's see now what happened. We can reduce our risk. We can put our stop loss above the most recent high. We have again gotten a clean close. Looks very good. We are now looking to scale in. I don't have an order on right here because for the price to retrace all the way back, it would take 22 pips. So do you think if the price retraces all the way back that it is most likely going to reject from this level? I don't believe so, because if we have momentum to go all the way back, that would show me an aggressive retrace. And what does an aggressive retrace signal? It signals a range or a reversal. So I don't want to be in any sort of an aggressive retrace. That is why I don't have an order on currently. I'm just waiting to see what happens. Price is still moving. Now we have a counter trend move. I'm now looking for a flag. We have gotten a large wick here, so I want to see a range if I will be taking any sort of a flag. Price actually continues dropping. We can further bank more profit. We can move our stop loss above this most recent high. Price dropped, clean close. Again, do I have an order on at this level? I don't, because that would show me an aggressive retrace. Let's just measure it. How many pips? Whoop. Boop. 23 pips. That's too aggressive for me. That would show me a momentum shift, and I'm just not happy to take that. I'm waiting to see how this impulse develops. Is this a counter trend move? Let's see the low. 489, 488. That means this candle is still part of the downtrend. And let's see if a flag forms now. This is looking very, very good to scale in. Actually, weekend is starting. So this has just broken the low retraced. I can then move my stop loss above the most recent high, which is now this candle right here. And since the weekend has started, I'm waiting for the London Open to either be taken out or to scale in, so to sell more. Continues down. Continues down, definitely a good sign. Continues down even more. Continues down even more. So this is now a huge trade. Will I be taken out here? No, I would not. So yeah, we can scale this down even more. We can move our stops. Let's see. Let's extend this. And I would now be looking for a scale in. So, oh, London hasn't opened yet. Let's wait. 7, 8. Okay, now I can look for trades since London has now opened. To be honest, I would not place my order at this inside bar. That would be the entry area. As I said, I'm taking trades either from an inside bar, or if there is no inside bar, I'm taking them from the most recent low. Look how much the price would need to retrace. So 27.4 pips, that's just too much. That would definitely show us a momentum shift. So I'm definitely not taking that sort of a setup. I don't want to be in a momentum shift. And then price takes us out for, what is this? Around 14.5% if you're risking 1%. So monster trade on the Aussie US dollar. I did actually take this trade live. I will post a screenshot, so right in the video. And so I did actually close it before the weekend. I closed it on a Friday evening because I didn't want to risk price gapping because there was a war, I believe, or something was up, so I did not want to risk it. But I did make some really nice percentage on this trade. So yeah, let's move the lines again. This is exactly why I said to you, I'm not taking an aggressive retrace. Look what happened. I would have been taken out because once the price builds that much momentum, usually that momentum continues and takes you out. So now we're stuck between the low and the high. Let's see what happens. We break the low, retrace, leave a wick. Then we go up. Then we break the low again, retrace, leave a wick. Retrace again. Now this is signaling to me a range, which is completely normal. After a huge move to the downside like this, we do usually get a range because the market has its accumulation phases and the market has its distribution phases. This would now be either an accumulation phase where the price accumulates for another move, or just a small pause. This would be a big move, so this would be that trend, this would be the range. What is happening now? We have broken the high, retraced, broken the high, retraced again, and now we are continuing to the upside. So we are now preparing for a move to the upside. Maybe this will start trending up. We have gotten what we were waiting for, a nice push up, bigger than almost all of these candles, showing us a clear momentum shift, but let's see if it continues. It does continue. Unfortunately, leaves a huge wick. After this sort of a huge wick, I'm just being more patient, to be honest. Maybe if we get a larger range, a really wide range, I would consider it, but we instead got an aggressive retrace. Huge wick plus an aggressive retrace. Big warning sign, I'm staying out, waiting for the break of the low, break of the high. We broke the low, got a clean close, continued down. So let us see what will happen. Now for this one, let's analyze this potential setup. What's good about it? This nice push. What's bad about it? Aggressive retrace here. Compare the size of the candles. It's kind of similar size. And this low, this break of the low is just not enough. Also, we left a big wick. So this break is what kind of is definitely keeping me out of this trade. It's just not big enough. But we do continue. Now this has gotten interesting. I don't have an order on here because I just told you a couple of times I don't want to be in an aggressive retrace. That's again a 22 pip retrace. That's too big, and I just don't have an order on exactly for this reason right here. Aggressive retrace to the upside. So, and it is, oh, it's Wednesday, so but aggressive retrace to the upside, it would have taken you out if you had an order on. So it would be a V reversal. This is exactly what happens. You get taken out. So yeah. Now we continue up. We have broken the most recent high, retraced, broken the high again, got a clean close. I'm not looking for a trade here because this sort of a pattern doesn't work out. This pattern is called a V reversal. And usually if we just break the most recent high, leave a wick, break the high again with just one candle, what happens usually this just retraces and gives us a larger range. So I'm not looking for a trade here. What I'm looking for another push up. Actually, we're getting exactly what we were expecting. This is starting to retrace. This is starting to retrace. We got a large wick and this is what happens. That is why after a V reversal, large wick, and then it just breaks by one candle, I don't take it. This is the exact reason we get a larger range. Now we're just ranging around. We can move the lines, but there is no need since this is just ranging. We are looking for a convicting move up or a convicting move down. We broke the low, clean close, but we need to see if it continues. Of course, there is a liquidity area below. From the people on the lower time frames that are buying the bottom of this range, they keep their stops here. That is why this candle is the deciding candle. If it retraces, then we'll most probably reverse or start ranging. But if this continues, that's a good sign that we can look for a short. And it continues, but leaves a wick, so it doesn't continue. Big warning sign right now, huge wick, expecting a range, not looking for any sort of a trade because we just broke this low and retraced. We got into the lower liquidity area. A couple of warning signs, definitely not seeing a trend, and we reversed to the upside. Why did we reverse to the upside? Well, because the market makers took out the liquidity here, took out the stops, then bought and just started an upward move. Now this can be considered for a reversal trade. So let me go over a reversal setup right now really quickly. We have a descending structure, a descending channel. We have reversed up. This would be the most recent high. We have broke it with just one candle, unfortunately, and got a large wick. If this was a clean close, I would be looking for a trade. Since there is a large wick here, I'm looking first for a range. Unfortunately, we got an aggressive retrace. After an aggressive retrace, after a large wick plus this aggressive retrace, I'm not looking for a trade. Why is this an aggressive retrace? Well, just look. We have two consecutive red candles, almost no wicks on the bottom. That indicates to us that the momentum has switched to the downside. Again, this is something for you to backtest, something for you to make a chart. Aggressive retrace is very important. Large wicks and aggressive retraces. Big warning signs, usually price reverses or ranges. Okay, we have now gotten a V reversal. What do we expect after a V reversal? We expect a range. V reversal, we are expecting a range right here in this area, and we got a huge wick, another sign of a range. Now we can just play the price action, wait for something to happen, and we have gotten a push up, but it ended with a large wick. So, and again, it's kind of stuck in this corrective descending structure. Overall price action, it's not looking that good. It's kind of stuck in this range, in this corrective descending. We're just breaking the lows, retracing, leaving wicks, breaking the highs, retracing, leaving wicks, just doesn't look good. And again, broke the high, left a huge wick, still stuck in this larger range. Let's see how the price develops. We push down now, but this candle doesn't look good because it has a huge wick on the bottom and it's coming from range bound price action. We need to see it continue down. We need to see another push down. This is now looking good, but again, leaves a wick. Another warning sign. This now continues and it's now looking good, but look at the time. It's Friday. It is already 7 p.m. London time. What's my cutoff time? It's 5 p.m. London time. I cannot take any trades at this point since according to my trading plan, my trading rules, this just is a no trading period right now. So we just wait for the weekend and then we start all over again, 8 a.m. Now we're coming into the month of May. So April was an awesome month to trade. We will stop the backtesting session. So hope you guys took some value, hope you guys enjoyed. A lot of setups happened in April, a lot of good setups, a lot of bad setups, which I have stayed out of and just showed you the reason. So you need to be careful of the wicks and the aggressive retraces, and you need to distinguish between good price action and bad price action. You need to see the size of the candle, compare it to the size of other candles, then you will see if the price is showing momentum or just continuing to range. If you want a one-on-one coaching session, if you want to learn this, learn it in more detail, check out the link in the description, go to my website, book a call, check out my YouTube channel. I post daily trade recaps and forecasts, I post educational content, everything trading related, follow my trading journey. Each trade I take, I put on the YouTube channel, so I make a trade recap. Check it out, subscribe, like this video, and I will see you guys in the next one.